Hi, welcome to She Wealth Unplugged, episode 2. Today we're talking about creating $1 million baby. Yes, we're talking about $1 million baby. By leveraging the power of life insurance, index universal life for wealth accumulation. Let's unplug.
We jamming, ain't we? Yes. Hey, ladies. Hey, everybody. Thank you for
Hey,
joining us. This is Chanel.
I'm Daphne.
and I'm Shonda.
Welcome back, ladies. Welcome back. We have a
Thank
great
you.
video today that's going to break down Index Universal Life for kids. Let's take a look.
A pretty money-savvy guy once said, "Someone is sitting in the shade today because someone planted a tree a long time ago." So you're ready to start saving for your kids' future. You already understand the power of compound interest over time, so you know the sooner you start, the better. So where should you be saving that money? Let's talk about perhaps the most powerful and least known savings vehicle for kids on the market, Index Universal Life, or IUL. IUL stands out against all other savings vehicles in one main area of strength: flexibility. Other financial vehicles lock you into what you can use your savings on, but an IUL can be a first car, a college education, a down payment on a house, a wedding. IUL cash value can be used however, whenever, and on whatever you choose. Plus, since it's built on a financial chassis of life insurance, your child is instantly covered with hundreds of thousands of dollars of permanent life insurance with living benefits, simply as a side benefit of utilizing IUL as your choice of savings vehicle. Now don't freak out, the fact that it's life insurance is actually a good thing. Life insurance cash value comes with a ton of unique side benefits, like your cash value being protected from market losses, cash value growing tax deferred and being accessible tax-free, protection from lawsuits, and IUL cash value is not considered in asset calculations when applying for student loans for college. So, what could one of these policies look like for your kiddo? Let's say you had a baby today, and to take maximum advantage of the power of compound interest over time, you immediately start socking away $100 per month into an IUL. Right away, your child is now covered with $371,000 of permanent life insurance coverage with living benefits. That's a pretty nice little side benefit. And that financial foundation you establish for them today will continue to grow with them over the years and be available throughout their lifetime for whatever they need or want to use it for. Plus, if they don't access that money, right around retirement, their IUL is conservatively projected to hit $1 million of cash value. And at age 65, they could turn on a tax-free income stream of $75,000 per year that will last them the rest of their lives, no matter how long they live. The point is, they have options. IUL is the most flexible savings vehicle for children on the market, and the best time to plant that seed is today.
Okay, so that video pretty much said it all. It said it all. It was dope. It was dope. I gotta give them a hand because they did a great job with that video. Like
They
there's some
did.
people out there that know what they're talking about.
Yep.
There's people out there that do not know what they're talking about
Right.
and trying to act like they know what they're talking about.
Right.
But we're just like you guys. We are out there searching for information, and it's a learning process. This whole thing is a learning process. But today we told y'all we talk about the $1 million baby. Okay, sounds crazy. It's not. It's very doable. Let me just bring this up. Remember back in the day, anybody who had children out there, you ladies have children. Do you remember? I don't know if they did it everywhere. Do you remember where they came into the hospital when you first gave birth and you had all these brochures and stuff? Did you see the Gerber baby brochure?
Yes.
Okay.
Yes.
Yes.
We ignored it. Yes, we did, because we weren't
Mhm.
taught to pay attention to that, right? So
Right.
Mhm.
back then, I believe that was whole life,
It
Mm.
was.
It
It was
was.
whole life.
right?
Mm-hmm.
Right.
So that is how you create $1 million baby. So all those people out there, all those ladies out there that, if you do remember that brochure with the little baby and you didn't fill it out like the rest of us, okay, you missed out.
Yeah.
You missed
Mhm.
out. And I could
Because
kick
I want to
myself.
have a conversation with my parents right about now,
Right.
and my own self,
Right.
because I should have
And
done
they
it
parents.
Done
for
it.
my kids.
Yep.
But we're talking about that was whole life. So what people found out later is that that cash accumulation that they talked about wasn't the greatest. But now when you start
No,
talking about an IUL, that's like accumulation on steroids. What do you think?
it is. It is. And it was created in 1996, so it is fairly new.
Mm.
But there are companies that, and not getting away from the babies and stuff, but there are companies, Daphne, you mentioned a company in our last episode. Walt Disney created
Yep.
Disney World,
Yep.
Disneyland off of insurance. Why
Right.
Yep.
did he have to use insurance? Because he needed to be his own bank. Why did he need to be his own bank? Because the banks thought that he was creating a circus and they were not about to back him and give him any money for his circus with Mickey Mouse running around as the ringmaster.
Right.
Okay. So he used life insurance. That is what we are talking about today. You might hear about people talking about be your own bank, infinite banking. We don't really use those terms like that too much, but when you're talking about your children, it is very easy to get a policy for your child.
Mm.
Yeah.
We can get you a policy for your child if you have uh uh what is it, a young child, probably I'm gonna say 15 days old.
Yes.
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 you know the policy can get approved in seconds as soon as you press
Yes.
submit.
Right.
Right, so it's
Right.
not, there's no medical, there's none of that. So there's really no excuse if you know about it. You're
Right.
held accountable for the things you know, not for the things you
Right.
don't know. So
Right.
now that you
That's
do
right.
know and you're watching this, we're going to tell you all about it, right? And there are benefits to having an index universal life policy for your
Mm-hmm.
children. And like people were talking about, be your own bank. Your children are going to be able to be their own bank when they can, when you allow them to be their own bank with this policy, because you
Mm-hmm.
own the policy. In the meantime, you are their own bank.
Mm-hmm.
You're able to go into that policy with the money that you're putting in. It could be $100 a month. If you don't even touch the policy, they can end up being millionaires when they retire. Retirement is a huge thing right now. We don't know where that money is coming from. If the child is going to end up being, who's going to have pensions? Like, these kids want to be
Right.
entrepreneurs, so they're not putting any money into Social Security.
Right.
Okay, please do not forget, they're not putting any money into Social Security because they want to be entrepreneurs. So if they want to be
Right.
entrepreneurs, who's paying Social Security?
I
Right.
mean,
Right.
we're
Right? So
raising
where's it coming from?
generations. I'm sorry, we're raising generations of TikTokers and YouTubers now.
Right.
Yep.
Right.
There's no retirement plan there for them.
No.
Not
Nothing.
at all. Not
And
at
they're
all.
getting checks. They're getting checks. And if their parents knew this stuff, they would have a life. First of all, they need to have a life insurance policy. Forget everything else.
Right.
Forget IUL. They need to have a life insurance policy, period. Right? But
Right.
why not set them up with a life insurance policy that has living benefits? So if they get sick, if something traumatic happens in their life, they can take care of themselves. If if they're on their own at a certain age, they can take, or the parents can take care of them, because health insurance is going to do so much, but health insurance
Right.
is not going to help the parents when they can't go to work and they need to pay the mortgage or they need to pay the rent. That child's life insurance policy can do that.
Mm-hmm.
You just gotta ask some questions. You gotta find out, and don't be scared to talk about money, because when you're scared to talk about money, you're not going to be able to create generational wealth. You can't always look like money and can't talk about money. That doesn't make any
Right.
sense. So this, what we're talking about, the benefits and the features of index universal life. Any type of, there's whole life policies out there, and some people choose whole life policies because they are more conservative and more guaranteed. But I personally, I when you're trying to build for a child, you go for index universal life. Okay.
Go for the
And
policy on
it
steroids.
right,
Absolutely.
like, but I don't even understand what you would. How, there's no real argument. People have tried, but there's no real argument that I feel comfortable with agreeing with the person when they said, no, the whole life is better than the IUL. No, the living, first of all, when you take a loan, I'm going to drop the mic after this. When you take a loan out, since you want to be your own bank with a whole life policy, when you take the loan out on the whole life policy, you got to pay that back.
Yep.
When you take the loan out on in an IUL, you don't have to pay it back
Right.
because it's called a wash loan. If you want some more
Right.
information, the link is below. Okay, so I'm just saying, we've got to get educated on this, and people
Mhm.
can really set their families up and really do something about generational wealth and stop talking
Mhm.
about it.
Absolutely.
Mhm.
What you guys think?
I was just going to say that I just think it's important just to piggyback on what you said about children and what they're going towards this day and age. They're not going to the traditional 9 to 5, right? So imagine
Right.
your child comes to you and says, "Hey, mom, dad, I don't want to go to college. I actually want to open a bakery, and I want to know, what I can do to be in position to open a bakery after I graduate high school."
Mhm.
Right.
Or study abroad in France so that I can
Right.
learn how to make the best croissant before opening
That
a
sounds
bakery.
familiar.
Right? Mm-hmm. Right.
Sound like one of
Yeah,
your kids.
right. Don't it? Just imagine you were able to say, "Sure, let's see how much that costs, and let's draw that from your index universal life insurance policy."
Right.
That
And don't worry about it.
we don't have to worry about it. We don't have to call
Yeah.
investors. We don't have to call grandparents. We are able to be our own bank for our children. We
Mhm.
saved what, $50 to $100 a month, and then offered whatever our children needed in form of a loan to build their businesses.
Yes.
It's just it's a no-brainer. I mean, yes, we can use it for school. Yes, we can use it for a car. Yes, we can use it to help them start their own business and be an entrepreneur out the gate.
And isn't that awesome? Not to
Right.
have to worry
Exactly.
about banks and, oh, my
FICO
credit
scores and
score and all of this, and you've gotta be in business for 2 years before anybody's gonna consider giving you a sizable loan.
Right.
But most
Right.
importantly, I think that the stigma around children and life insurance is that the parents don't wanna talk about it because they're thinking in terms of, "I don't wanna think about having to bury my child." But
mhm.
what
Right.
they need to understand is that this is protecting your child. This
Right.
is not about burying your child. That is just a added benefit if something does, God forbid, happen.
Right.
But
Hmm.
we're talking about giving them a future that you would not be able to give them without this type of vehicle.
Exactly.
Right.
Exactly. I saw a video once that really compared when Alexander Graham Bell came out with the telephone, right? And if you look at the evolution of a telephone, we
Mm.
now have smartphones.
Right.
So
Hmm.
then you look at the initial life insurance policy, which was your cash value, it has now evolved into the smartphone of life insurance policies, and that's the IUL, because it encompasses so much. And for your children, it's an all around protection because you are giving them wealth,
Mm-hmm.
you are giving them a death benefit, you
Right.
are giving them accumulating balances, and you're giving them hope,
Yeah.
Mhm.
and you're
Right.
letting them be free.
Right.
It's
Yes.
the best gift that you can give your child.
Absolutely.
I
And it
wish I had been $1 million baby.
mhm.
That's
Me too.
that's
But
good.
I probably wouldn't be talking to y'all right now if I was.
Right.
So here we are.
Right.
But also, when you do this for your children, you don't just do it and don't let them know. Let them
Right.
know what you're
Mm,
doing so that they can take that with them. So, my mom did this for me. Let me make sure that I
Right.
do this for my kids as well.
Right.
You know,
Right.
and now
mhm.
now we've started a cycle of wealth building.
Have a
Absolutely.
money date. Have a
Right.
money date with their
Yes.
children.
Yep.
Yes. Just
Yep.
to piggyback on
Exactly.
what Kay is saying too, like it is another tool in the parenting piece, right?
Hmm.
But because so, I want to say that after working in high school for 25 years, sometimes you see kids become disrespectful to their
Mhm.
parents,
Mm.
right?
Mhm.
Sometimes you even hear a kid saying, "We ain't never have any money. We ain't never," whatever they're complaining about. And imagine having a tool or vehicle like this to be able to coach them up along the way, little by little,
Mhm.
just
Mhm.
encouraging them, letting them know there is a light at the end of the tunnel. I
Right.
make preparations for you,
Right.
and
Right.
helps them want to lock in
Ooh.
to that money date. You know,
Yes.
it helps them lock into that money date, and it just continues to empower them as a person. And they're not thinking I can just go with the traditional um, fire, police, doctor, lawyer jobs that they talk about when we have career day. They can actually
Mhm.
think about something else.
That
So
is
Right.
awesome.
That's true.
And
That's
speaking
true.
of career day, did y'all ever get entrepreneurs at
never,
your
No.
career day?
no,
No.
no.
Never. No.
No, but in my daughter's career days, yes. But when I was in school, no.
Mm,
Yeah.
No.
I don't even remember who came to career day. They didn't even impress me enough. I don't even remember.
right,
Mhm.
I was impressed by my mother and my father.
right.
My
Right.
father was a chef. My mother was in IT. I'm in IT.
Wow.
Yeah.
See,
And I
Yeah.
learned how to
Makes
cook
a
from my,
difference.
well, both of them. But yeah, no, I don't remember any of those people's careers
right.
at all.
Wow, that's interesting.
Yeah.
So, one of the things I wanted to just kind of bring up as we're
Hmm.
talking about how important an IUL is for your child is a lot of people, because it is relatively new, are going to wonder, well, how does it even work? Like, why is it so special? How does it even work? So, basically, just in a nutshell, it is a protective instrument that is set to mimic the market without
Hmm.
necessarily putting you into the market. And so, what does that mean? Well, there's several indexes. And I don't have anything against the stock market. I got some stocks. It's okay. I'm good. But there are some indexes that you can mirror, which IULs actually can mirror. And when we say mirror, is when the market is going up, then you actually within an IUL can take advantage of most of those gains. In
Right.
some instances, you can take advantage of all of the gains depending on where you have these instruments. But you can take advantage of most of the gains. Now we know over history there have been several events where the market has crashed, right? You had the dot-com, you had the real estate, you had COVID, you had so many things. So what happens with your money as these markets are crashing or going down? Guess what? Are y'all ready? Are y'all ready?
Mm.
Yes. I'm ready. Always
You
ready
don't
for it.
you don't lose your money. Now,
Right.
That
where
part.
can you put your money? What instruments can you put your money in where if the market goes down, you don't lose your money? And here's a way that you think about it. Most people who have investments look at the stock market and say, "Oh, well, stock market is going good. I'm good. Oh man, the stock market, went down. Oh, it's killing me." But you know what? Regardless as to what happens in the markets, when you have an IUL, it can mimic the good part in terms of the increase and yet protect you because of resetting from when the market goes down. And the only place you can get that is in an IUL. So when you're
Absolutely.
Right.
investing for your child on a long-term basis, then you are protecting those monies so that your child, when they become an adult, still have gains that are tax free. So you don't have to worry about any
Right.
kind of ramifications to that. Internal Revenue Code 7702. If you
Bam.
don't know
Bam.
what it is, I think we told you last
Bam.
time. Bam,
Y'all ain't look
bam,
it up.
bam.
You ain't look
Look
it
it
up.
up. You all need to look it up. But that
Look
is
it
one
up.
of the things that really protects you. So when you're trying to do something good for your child, this is a good thing that you want to do for your child. This is going to help them. And you don't have to worry, and they won't have to worry. It's just one of those things.
It's a beautiful thing.
It's a
And
beautiful thing.
you really tapped on it as far as the and there's so much to this, you guys. We can't give you everything. Like,
Right.
that's
No.
it's not what we're trying to do. We're not trying to sell you a product or anything, and just,
Right.
but we there's so much to this. It's really simple, but we're giving you as much as we can, so it'll intrigue you and want you, and have you possibly do something for your baby.
Yeah.
Even if your baby is 19,
Right.
do something for your
That's right.
baby. That's still your
That's right.
baby. Do
Right.
something for your
Yep.
20-year-old, your 26-year-old.
That's right.
I'm working with a 26-year-old right now. And she's
Mm-hmm.
like, I'm ready. I'm preparing myself because her parents are doing the right thing.
Yep.
They're taking steps to do the right thing. So they're teaching their children how to do the right thing, right?
Mm-hmm.
And it's just an awesome thing to see. Like, we are almost in tears. Just, I love them for how they're taking the approach and having those money talks with their kids, and having their children around people who understand. You got to have your children around people. It's not what is it? Seen and not heard. Yeah, that's most of the time, but you need to have your children around people that are doing something
Mm-hmm.
Right.
with their lives and understand money. But if you don't
Right.
have those people around them, you need to start understanding money,
Right.
Right.
you know?
And don't feel
And
threatened to
what
have your kids around those people.
Right.
No one is
no.
trying to take, no one's trying to take your place.
Mm.
Don't feel afraid. Don't feel like, oh, I don't want my child around people. No, put your child in front of folks who got some money and who
Right.
can teach
Let them
them
ask your
and
child
teach you.
questions.
Yes.
Yep. Yep.
Challenge.
Yep.
Yep.
Because it's
Absolutely.
the policy is important.
Mm-hmm.
The policy is important. And just what Daphne was saying, you participate in most of the gains and none of the losses.
Mm-hmm.
So, which means that your policy could be capped at 16%, and this is compound interest. Look that up.
Compound. Woohoo.
Compound interest, right? I'm
That's
probably
like
Woohoo.
putting it on screen. Okay.
sunshine every time.
It's like, oh, butterflies and
You know what it
love.
sounds like? It sounds
Compound
like
interest.
it sounds like this.
What is it?
Happy.
Oh,
Oh
yes.
yes.
See,
See.
okay, it's
Okay.
compound interest. So 16% cap, but guess what? When they were talking about the dot com era, when they were talking about the subprime era, when
Mm-hmm.
people lost their money in their 401k plans,
Mm-hmm.
whoever had this IUL didn't lose any money.
Mm,
Lose.
And as soon as the market crept back up, their IUL went back up. But these are
Went
the
back.
people right here with the 401ks.
Yep.
You could be doing the same thing right here with this IUL as you're doing with your 401k or for your kids, but that market went back up. When the market drops, you stay, it's
Right.
called a
level.
0% floor.
Right.
Right.
You stay level, you stay whole. You actually make 0.25%.
Right.
So you really still make it when the market drops. But the
Right.
thing is, what why would you not want to put your money there?
Hmm.
Like, why?
Yeah, and
That's my question.
let me piggyback off of that for the 401k
Yes.
part, because
Oh, please
taxes is,
do.
I
The
like
tax
tax
lady.
free, I
Gone.
like tax exempt, I like all of
Some
those
people like to pay
terms.
taxes.
But just to piggyback off of that, we're talking about risk, mitigating risk, right?
Right.
So even that 401k, a lot of people, they're like, oh, well, my company's matching me 6%. Well, what is
Mm.
6% of nothing? Ask the people that worked for Enron
Yes.
Just
that lost
saying.
everything that they had invested
Everything.
for over 20, 30, however
Yep.
many years they have been with that company. If
Yep.
they had just moved some of those funds, because again, we're not talking about a one all be all, we're talking about diversification, right?
Right.
So
Right.
you want to have vehicles in place. Yes, you can assess how much risk that you can take, you know, but why not have something that gives you no risk at all?
Mm-hmm.
So you
Mm-hmm.
Right.
always have a blanket, you always have a cushion to fall back on.
Diversification.
Mm-hmm.
We are not saying this is the end all be all, but it is very close.
It should be a foundation.
It should
The
be a
beginning.
foundation. And when you think about it, as you're creating your $1 million baby, guess what else you're creating? A
Mm.
legacy, because now your $1 million baby has funds so that they can create $1 million babies
Right.
and more $1 million babies and $1 million great grandbabies and great grandbabies. So your legacy is huge because you gave your child a chance. Why wouldn't you want to do that? I mean, maybe there are some who don't want to do that, but I don't understand. But
Right.
you can
And
do
now
that.
that you know that you can, you just need to talk to somebody.
Right.
Right.
Talk to
Exactly.
Kay, talk to Chanel, talk to Daphne, talk to me. The links below. Talk to somebody
Please.
so that you can learn what to do. Whoever here resonates with you.
Hmm.
Everybody ain't for everybody, but we all got the same information. If you want to
Right.
Yeah.
hear it from, the Louisiana voice over there, if you want to hear from the East Coast voice over here, whatever. Daphne, she's so sweet. She Midwest, West Coast. Chanel, she LA all day.
And
And I'm just saying, it don't matter. Talk
no,
to somebody. We can
here.
help you.
We
Hmm.
here.
Absolutely. Absolutely.
What else do
Who's
we
next?
have? What
What else we
else?
got?
Man.
Did we
And
did
I
we
can
talk about tax deferred growth?
You know what?
Did
no,
we
Miss
We
talk
Tax
did.
about
Miss
that?
Tax
we did
Lady.
Miss
no.
Tax Lady.
We
Miss
didn't
Tax
touch on
Lady.
taxes yet, tax lady. What you got?
Tax deferred growth. And
Yes.
also we have income tax exemption,
Mm.
meaning
Mm.
that the
Mm.
proceeds from the IUL are exempt from any income taxes. When you get
Mm.
ready to fill out those financial aid things when they're going to college, then you don't have to report that as income. And you're only going to pay taxes on the gains when you decide to take out um, some of the money from the policy. When you
A
get that
withdrawal.
a withdrawal, right? A
A withdrawal.
withdrawal.
Girl.
Withdrawal.
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 That southern twang and
That's
slang just came right on out, didn't
It
it?
just sat right when you want to
Can't
take
help it,
out the
y'all. She
money.
can't help it.
But the loan, it doesn't get taxed. That's tax free
Right.
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 because it's a loan. But
that's
yeah,
right.
when you take out a withdrawal, that's different, and
Right.
that absolutely gets taxed.
Or
Hmm.
in other words, when you if you decide to surrender
Right.
the
Hmm.
policy, and you will not be taxed on the money that you put in, you're only going to be taxed on the part that is gained. Okay.
Right.
Kay just stirring up her pot, man. She just
Is
got all kinds of stuff.
That stuff makes me
She got.
happy. Donald Trump paid less taxes than his secretary,
Hmm.
Wait, listen.
and he's
How
got
Donald Trump?
millions.
How Donald Trump gonna be like? He come up in every one of these type of conversations.
he does? I mean, it
It's
happens.
something to learn, but no one's really telling us his thing. But we
His
kind of
thing,
know.
But
But
we
it's
know.
something to learn
We
there.
know.
right? Because it
Hmm.
has to be this.
We
I
know.
mean, to continue to ask this man for his taxes, and he's like, no. I mean,
I don't know.
what else could it be?
Right. And then when he does provide them, he still doesn't owe.
Right.
Right.
What?
Right.
Like that ain't real
Like we
income right
just
there.
knew he was
Right.
on the hook for some millions, right?
Right.
But
And
no,
he's like,
because
no,
it's
He
tucked
just
away nicely inside of. I'm sure he's probably got 50 IULs
I
sitting
wouldn't be
don't
surprised.
worry, y'all. We ain't gonna be coming up on here with one Make America Great Again hat on. We
We
just
No.
promise.
it just he keep
somewhere.
coming up.
Promise.
When it comes to taxes, he just keep coming up.
Just put it into
But
It's
it,
perspective. If you're one of those people throwing your shoe at the TV
mm,
about him,
okay.
I'm just putting it in perspective. That's how
Right.
irritating these things are.
but we don't listen to what they say, right?
Right.
We look at what they do.
Mm,
Right.
Yes.
yeah,
Yes.
that's it,
Mm,
Kay. That's good.
yep.
That's good.
I
Ding,
love
ding,
the tax
ding.
free part of the IUL. I love it.
Yes.
Absolutely.
Listen,
And we're
It's a big
talking
even
about
thing.
avoiding probate. Let's not even talk about that. Right?
Oh,
Where your money is the kids may never get the money because it's tied up in this big succession and all of this that you got to go through the court system,
Hmm.
and then they gonna hit you with the inheritance tax. right?
Ooh,
Once you go through probate. Whereas if you just set a beneficiary, it's going to pay out and it's going to pay out tax free.
Tax free.
tax
Tax free.
free.
Tax
It's
free.
all kind of mics being
Wow.
dropped. It just
Wow.
every other sentence is a pause.
Wow.
Right.
But most
Amazing.
importantly, let's make sure that we're talking to a professional so that we can
Right.
assess how much risk we can take, how much we can put into the policy. Make sure that your policies are structured properly so that you
Mm-hmm.
Yes.
can get the maximum amount of gains from the policy. And again, shameless plug, you can contact any of us to
Any of
help you with that
Bam, bam, bam,
information.
bam. The whole Brady Bunch.
bam, bam. Thank you.
Bam, bam. Thank you, ma'am.
Here's a story of some lovely ladies.
Who are that's we could do a song. Here's a story of some lovely ladies. Oh,
Right.
we got to get somebody to
We're
do a
trying to save your
theme
life
song
and
for.
your child's.
Oh my gosh.
Oh,
I
Oh
love
my
it.
god. I
I
want to.
love
I
it.
want to create it so bad. That was dope. We the whole Brady Bunch. We got to do
oh
it when
my
we have a
God.
guest on here. They're gonna be right in the middle.
Oh, we're gonna have some great
Ah,
guests, some people that really know their business,
Oh yeah.
yeah, we
right?
Mm-hmm.
got some great stuff
Absolutely.
coming up.
Absolutely.
Trusts. We got somebody coming
Mm.
that is just he's very passionate about trusts.
Another
So,
word that's like sunshine.
Yes.
ooh, if y'all
Trust.
don't know this, look up this word. Irrevocable trust.
Oh.
Ooh.
Let's do the little
That's a
chimey
gem.
thing again. That's
Oh,
we need
I got
the
it.
little
Okay.
chimey thing again.
Yes.
You need this too?
Yeah.
Yes.
I love it.
Yes. What
Mm.
you got? What you got for us, sis? Chanel.
Well, you know,
We got Jules.
Sis over there unplugged. She been sipping. Mm.
look, I was over here. Honestly, I was over here
Oh,
making
don't
a
blame it on
banner.
the alcohol.
No, no, I have not had alcohol, only
You
coffee.
got
I was
juice.
I was making a banner with the irrevocable trust, and then you called on me, and I felt like I was in school all of a sudden. I was like,
Oh, damn.
what had happened was,
Oh my gosh.
yeah, yeah, we got some
Oh my
background
God.
things we doing, y'all. That's what's happening, and we're just trying to
We
put some things on the
multitasking.
screen. We are multitasking.
Hmm.
We're having a conversation. That's what's
Right.
happening.
Yeah, that's all this is. It's unplugged.
All
When you
right.
start
We're
That's
not
plugging
trying
all.
to.
stuff up, when you start plugging stuff in, it stuff be working real right and straight. It's unplugged. Okay.
Yes,
You looking for the plug.
you might hear the dog barking. A kid might
Right.
come in asking us for dinner because we're real moms over here.
Mhm.
We're
Yeah,
real
Real
moms.
we
moms.
Real
are
moms.
the real moms of insurance.
That's
We need
right.
a show. We need a show.
Oh,
We need a show.
So funny. Oh my goodness.
real
But
moms of
I mean, this
insurance.
our tax lady covers so much about the tax advantages,
Yeah.
of being a part of this policy, and the growth
Yeah.
of these policies in the setting of IUL. I mean, not setting, but in a packaged into an IUL.
Yeah.
So I thought about so many things surrounding the legacy piece. I thought
Mm-hmm.
about how can is there a way, and ladies chime in because this is just something I've been thinking about on my own whiteboard, right? If we have irrevocable trust, right, and the beneficiary of all the IULs for ourselves, our family, keeps going back into the trust to then
Mm,
Yes, yes,
hold the
yes.
money, right?
that
And
kind of
then
sounds
as
familiar.
our children continue to have children, we have
Mm-hmm.
this a huge bank because that's
Yep.
holding all of the death benefits that got paid out into, and they're paying out and creating new IULs for new grandchildren as they come, as the family continues to grow. Um, if someone needs to do something open a bakery,
Mm-hmm.
buy a home, just to go back
Mm-hmm.
to that
Hmm.
video. Now, in addition to having our IUL, we also have this lump sum inside of our irrevocable trust to continue to pull from as well. Is that
Mm-hmm.
something can we do for legacy? Please
Yes,
weigh
yes,
in on that for me.
yes. Listen, when I first got into insurance, I had this guy that I was dating at the time, but neither here nor there.
What's his
But
name? No, just kidding.
but
Just fine.
he was an agent for New York Life, and
Mm,
he only sold $1 million and up policies. But he was actually thinking of a concept just of what you're talking about, like building a family trust. You
Mm-hmm.
start with the matriarch or the patriarch of the family. Everybody puts in to the premiums of that policy. So when that person passes on, now we have $1 million, just say, if it was $1 million policy, that's inside of this family trust, right? So when anyone in the family wants to start a new business, needs to buy a
mm,
car, is ready to buy a
mm,
home, instead of going to the bank, we're going
mm.
to
Mm-hmm.
the family trust. But
Is she preaching?
we have to put responsibility on the people that are pulling the money out of the trust because
Right.
we're going
Right.
to put that money back.
Back.
Right.
Mm-hmm.
And so it's going to keep accumulating over time. We're going to keep adding in, like you said, policies. We've got policies on the children. We've got policies on everyone that is utilizing this trust. And we're also paying back the money that we're putting in, and the accumulation is keep growing, and now our family never has to go to a bank or any
Mm-hmm.
type of institution for a
Never.
loan to do the things that they want to do, and think about all of the different businesses and things that can be done, and all of this is being put into the trust. That would just be
Ah,
like
It's
amazing.
huge.
so many jewels. She just dropping. I just
That's
drop the
huge.
mic.
You know
Oh,
what?
let me drop
You know
my
what that
mini mic.
sounds like? That sounds that sounds like the chocolate fondue that just keep coming.
Right,
Right.
That
Yeah.
Right.
sounds like, right? Doesn't that sound
right,
like that, yellow?
It
That's
does.
It's too.
legacy
It's
that you're
it's
creating for your family.
yes. It's too
right.
much like right.
We keep, talking about, oh, okay, $100 a month for your kid. What if $100 a month is really something that I can't afford for my
Right.
kid? Are we
So
able to start lower and it still be
absolutely.
beneficial?
You can.
Absolutely. And here's the thing. If the $100 isn't something that you can afford, then try 50, because the bottom line is something is better than nothing. So if
Right.
you don't come out with $1 million, think where your child will be if they come out with 500,000, a half a million,
Absolutely.
Wow.
comparatively speaking. And then the other thing, you're not precluded to just have one policy. Who knows what your financial situation might change to, and then you are able to do something more. So the bottom line is just start somewhere,
It's good.
because
Right.
something is better than nothing. You've
Right.
got to you've
Right.
got to start somewhere.
And let's be honest, if we stay out of the McDonald's drive-through and at the Chick-fil-A maybe two, 3 times a month, we might can slide that
Well,
in.
that's
You
the beauty of the other things that we do with our clients, is actually helping
Right.
them for free take a look at what's coming in, what's going out, and help them redirect, as long as they can articulate what the goals are that they want to set. We can help them with that. If you
It's
want help
everything is
with that, we
goal
do it.
motivated. That's it.
Yes,
It's not money motivated. It is goal
it's
motivated.
goals.
What are your goals? No
What are
one's
your goals?
policy is going to be the same as the other person.
That's
Right.
it.
So if you're starting at $50, we're going to be realistic with you. You
Mm-hmm.
absolutely can. The younger the child, the better. 15
Right.
days old, you can get a policy.
mm,
Right.
Social
15 days
security
old.
number. That's all they need.
That's it. 15 days old.
Mm-hmm.
And grandparents, you can do it for your grandkids. You just got
Right.
to
Yep.
get your kids to sign off. But,
Right.
you could do it for your grandkids, and start putting money away for them. If their parents aren't doing it or what have you. Maybe you didn't teach your kids, but now you are listening to this and now you're like, "Oh, well, how can I help little Johnny?"
Right.
mhm.
This is how you can help little Johnny.
Yes.
But I just want you to understand that the million, and that was a good point. 500,000, $500,000 baby. You can have $1 million baby, $500,000 baby, $250,000 baby. It don't matter, but you could have $1 million baby. But my thing
Yeah.
is, just know that that $50, there is a portion of that $50 that's going to go to the cost of insurance. That cost
Mm-hmm.
of insurance may only be $5.95.
Yep.
The rest of it goes into the cash value part of the policy. On top of that, your child has living benefits. So whatever happens to that child while they're living, they can pull from the death benefit while they're living, even though they still may live and get through what getting through what they're getting
Mm-hmm.
through, going through.
Mm-hmm.
And on top of that, they have a death benefit. It's so many
Yeah.
positives to this.
Mhm.
$50.
Right.
And you have room. You will, it depending upon if it's written correctly, you will have room for that policy, for that payment to be higher
Yeah.
Mm-hmm.
instead of getting a new
Yes.
policy. But
Yes.
you did touch on that. You can get another policy. You can have as many IULs as you want.
As you want.
Mhm.
That's so
You got
good.
50 grandkids, you can have 50 IULs. You got 50 kids, you can have 50. I don't know
That's
who
so
got 50
good.
kids, but I'm just saying, you may have kids that you claim as your kids and the
You
paperwork
might be
signed over. You can
the old lady who lived in a shoe.
right.
Mm.
Had
That's
so many policies, she ain't know what to
You know
do.
what to do.
right. You know, even as you were
It's a
just talking,
tool.
Shonda, all I could think about is how many people I've seen having a car wash for their unexpected child's
Oh,
passing.
Yes.
oh,
Yes.
Girl,
God.
we ain't gonna talk about the fish fry and the GoFundMe. I'm just
Mm-mm.
not gonna be able to do
GoFundMe.
it today.
Right. GoFundMe. This eliminates that.
Mm-hmm.
We don't want to talk about that. That's a hard thing to talk about, losing our
Oh,
children, and
that's a
God
hard thing to
forbid.
talk
Mhm.
about.
Mm-hmm. Mm-hmm.
It's different when it's
Yes.
an adult.
Yeah.
But when you need a GoFundMe for a baby, for a child, for a
Yes.
teenager, come on, y'all. We got to put
Yes.
some policies on these children. It's not even
Yes.
about, we got to put some policies and make sure that we can cover their burial or cover,
Right. Right.
that's the icing on the cake, but
Yes.
there's other benefits, but it's a hard thing to see,
Yeah.
because I've seen it in our family, and even when
Mm-hmm.
my mom passed, I had a GoFundMe. I
Mm-hmm.
wasn't prepared when my mother passed. And
Mm-hmm.
that's a whole story within itself, because there are different illnesses and stuff, and you don't know who will cover. People are, life
Yep.
situations are different, but the goal, that's one of my things as far as helping people personally. I don't
Yep.
want to see no more of them GoFundMe's unless you just want some extra money on top of the money. I just,
Yeah.
you got to cover your kids. You got to cover
You
your
do.
family. You got to motivate everybody to get covered, and do not just get regular terms. There are better terms out there.
Yeah.
Talk to us. There are better terms out there than just going to get, oh, I just paid $20, $15 for a, $5,000 term. No, no. All that energy you took to figure that part out, you could have got something
That's
10
right.
times better.
You may could have gotten an IUL for the kid and at $15 a month.
Right.
Right. But you're not going to know if you ain't talking.
Unless you have a
Right.
conversation.
Yep. Yep.
Yeah.
Them
Let's
Gucci
have
shoes
the
and belt
top
is real
the
cute.
tough conversations. Let's have them.
But
Let's
Yeah.
have them.
let's have a Gucci policy. How about that?
Right.
That's right. Leave the
I got a
Gucci
Gucci
bag. Let's get a
policy.
Gucci
I got a
policy.
Gucci policy for you. You need a Chanel policy, a Louis
Right.
Vuitton policy? Got that. Got that.
Right.
Bet you nobody else got that.
Right.
Balenciaga.
Got that Balenciaga.
That's
I'm
right.
about to choke on Balenciaga. Got that Balenciaga.
That's
Mm,
Are you
right.
well?
mm.
Right.
Can't even drink to that.
It just it's like the perfect bundle policy of everything.
It is.
It's
It is.
Of
perfect.
everything.
It's like,
It's the
oh,
smartphone
it's like
of policies.
It's a
It does
smartphone.
yep.
everything.
It's a
It's like
smartphone.
It
Of,
does everything.
a
that's good. Yeah.
beautiful blanket,
Mm-hmm.
beautiful fuzzy
Yeah.
blanket on a winter night.
Yeah. The evolution of life insurance.
Girl,
Yes.
this is good.
This has been
Oh
great.
no,
It's good, lady.
this has been super dope. Listen, everyone out there, please subscribe and share these videos with anybody. If you don't like them, share the video. Maybe you'll
Mm-hmm.
like them after you share the video.
Right.
If you love them, share the video. maybe you'll love them some more. They'll love you back. I don't know. Just share the video. We have so much information, so many jewels that we've been taught that we want to share because we weren't taught. So now we
Mm-hmm.
really need to share with as many people as we can. And we appreciate you watching this because we are on a mission.
Yeah.
We are on a mission to
Yes.
touch lives, save legacies. We are on a mission to what? Kay, say
Build,
it.
protect, and preserve.
What? Y'all ain't know. Y'all better tell somebody, right?
Mhm.
So put
And
I'm
if
gonna
you
put
want to
these.
tell somebody, we
Yes.
can teach you too.
That's
That
right.
We ain't
part
go
too.
there.
Mhm.
We
Yes.
haven't even
Let
gone there.
us know. We looking
We're
Right.
here for you.
right.
Yes.
We here for you. If you looking
Support
for
us.
another stream of
Hire us.
income, let's go. We got you.
Let's
Join the
go.
team.
Let's go.
Hit us up. Hit us up. I'm gonna put some questions out there in the
Hit us
chat.
up.
I was about to West Side. Oh my God. Insurance.
Insurance.
Well, listen. How do you feel? Let us know in the comments. How do you feel about your information that you've been given about insuring your children, the importance of it? Have you always thought about that as about death? What do
Mm-hmm.
you feel about that? Put it down in the comments. We want to hear from you. Like, is there anything else you need to know or would
Yeah.
like to know that we can, you know, tell you guys or bring some information to you? Do you need help with anything? We can, the topics are endless.
Right.
What how do you need help with understanding how to plan to actually have generational wealth? We said a lot of different things in this video today,
Yes.
but it's you almost have to watch it again and take some notes.
All
Right.
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 It's
Right.
notepad worthy.
Right. Yes,
Notepad worthy.
Right.
yes,
And
it
the
is.
other
So,
thing too is if you if you have policies for your children
mm,
or for yourself, we can do a review for you. And it's not an
absolutely.
IO. We can do that for you and be honest and let you know what directions you have in terms of options.
Yep.
So just because you don't have an IUL now, because you didn't know about it, but you're willing to see, you've got some policies, let us know.
Yeah.
Put that in the comments.
Right.
Absolutely. If you
That's
It
got
will
one of those
never.
policies from when the
Mhm.
insurance company used to come around and collect the money from you at your
Yes.
door, let us
Yes.
review that for you because I guarantee you
Please.
we have something we have something better and more beneficial for you.
Yes.
absolutely, absolutely.
Mm.
We are here. We, as we mentioned, that's free. That's a free
It's
service
free.
because
Mm-hmm.
we want
Free.
to educate all of us, anybody who's willing to listen, on what they can do to build, protect, and preserve their wealth.
Exactly.
Wow.
Let's
Well, thank you
go.
so much, y'all. I can't wait for the next episode. Check out our episode about the great wealth transfer because
Yes.
everybody need to know about it. Somebody gonna be a recipient, or somebody gonna be a giver, or somebody gonna
Hello,
be a receiver.
Mm.
hello.
That's right.
And
Just
if you
saying.
on the receiving end, what you gonna do with it?
What?
What you
What
gonna
you gonna
What
do
you
do?
with
What
gonna
you
it?
do?
gonna
What you
do?
gonna do?
What you gonna do when it
Gonna
comes
do
for
when they bring
you?
it to you?
Right.
About the
All
show.
right.
Thank you so much.
Thank you,
Oh,
guys.
wow.
Thanks for
Thank
Can't
joining.
wait to
you.
see you. Make sure you subscribe. See you later.
Bye
Bye-bye.
now.
Bye.